So tell us about what your preferred type of exposure is for commodities, and what commodities, are we talking about energy or something else here in Asia?
Yeah, thank you. Look, I think commodities overall have gotten off a strong start in 2022, and we actually do think the overall outlook for commodities this year remains positive. We have spare capacity narrowing, markets are in deficit, and the inventories are now visibly coming down, and we also have seen the news out of the US, and that eventually this inventory have to rebuild. So we do think particularly the energy sector looks strong from here. Industrial metals still very well supported by still ongoing GDP growth that we do see. And then we have the disruption of the war, which probably will lead to a bigger and broader commodity rally overall. And therefore, we do think selling volatility in the commodity space is interesting, buying FX-related commodities, and then also, of course, the equity complex, which still looks very interesting.
In terms of some of the risks, though, we see with some of these economies in Southeast Asia, Pakistan, South Asia, I should say, Pakistan and Sri Lanka, that inflationary issues and cost of living is now creating political risks as well. Is that a risk across broader Asia that we should be watching out for?
Well, I do think inflation overall is a major risk, even in the US, but particularly here in Asia, of course. And one of the consequences of the situation in Ukraine, particularly also via food price inflation, is, of course, more uphill and I would say political pressure. We have seen that also in 2014, the Jasmine Revolution in North Africa, for example, which is really triggered also by higher food price inflation. And it's just an additional headwind for financial markets for this year. So overall, in our allocation, we took a bit of risk off the table, but we actually have still the portfolio more to commodity complex. But on the equity side, for example, we reduced our exposure.
When it comes to those inflationary pressures, we are now seeing Asian central banks moving, but it seems that the PBOC is going a complete different direction, given that, of course, those inflation numbers out today are not expected to be that severe either. Where do you find the market opportunities here?
Well, China is definitely for us one of the market opportunity. It also bears, of course, a lot of risk. What's going on is a lockdown, as growth maybe will be weaker in the rebound as we originally expected, probably weaker than the officials actually see it at 5.5. But I do think that particularly the monetary policy support really has to switch on now in China. Growth is weak. We have lockdowns. It actually has low inflation, so they can do more. And therefore, we actually do think the PBOC really has to step up this time and support the market.
And Adrian, just going full circle on your call for greater gains for commodities, where do you stand on the switch to renewables and the green transition? Is that another space that you can see long-term gains, despite, of course, this focus on the short-term mitigation of these rising prices?
Well, absolutely. I think you have to run a barbell strategy. What we have seen is traditional commodities are not easy to be replaced, particularly in the short term. And we see now governments actually starting to put out substitutes for traditional commodities. But at the same time, we have seen that the US has banned Russian oil. Europe definitely wants to reduce its dependency of Russian gas. And therefore, there's only one solution. You have to make an energy transition. You have to be basically link yourself less to fossil fuels. You have to invest. And so there's a major investment coming through, which anyway already was in the making, but now we really will see an acceleration out of that. And I think this is something to capture. And we have seen the German minister also coming out, for the economic minister coming out, Robert Habeck, to really manifest basically this switch that will come. And therefore, I do think this is one of the key investment opportunities for the next 10 years.